Hey, what's up, everybody? Welcome to episode number 164 here on Season 1. And today we are getting into how do I manage my stash account during a crash? Or how do I manage my stash in a crash? Anyways, this question comes from Polar Barb. He asks, what should someone do with their stash account in the instance that there is a stock market crash or to prepare for a future crash? So that's like a two-part question, I guess. First of all, it comes down to the basic principles that govern your account, or the rules that you should go. If you don't have rules set in place, you should go back and set rules in place on how that account is going to actually function. So whether you're going to continue to make monthly, daily, or weekly, bi-weekly deposits, what ETFs you're going to continue to invest in, if you're going to auto stash certain ETFs, when you're going to sell those ETFs, all that kind of stuff, when you plan on reinvesting, all that kind of stuff should be drawn out to some degree. So my account's pretty simple. I hold Delicious Dividends at 25% and then hold all my other ETFs at $20, except for All That Glitters and Park My Cash right now. Once I get once I'm invested in all the other ETFs, I plan on turning Park My Cash up to around 25% of my account also, and then bringing up All That Glitters up to around 10%, taking REITs up to around 10%, and then going back and reinvesting into all those other ETFs again. But that's pretty much the way that my account's set up. So I feel like I'm pretty solid for a crash. But the best thing to do if there was a crash, or to prepare for a future crash, would be to keep your cash as liquid as possible. So that means not investing it and holding it would be the best idea for a crash. So that way, when we do have a crash, you can take your liquid assets, your whatever, say it was $5,000 you had invested in the market, you pull $5,000 out of the market, you keep it liquid until the market hits a low and we're starting back on a bull run, boom, put the $5,000 back in there so that you can catch a pretty good run. Same thing with investing. You want to buy low, sell high kind of thing. However, with that, it requires timing for the market and selling shares with timing and all that kind of stuff. And for a young or inexperienced investor, this can be really hard. And even I don't plan on trying to time the market with having my liquid cash readily available. So that brings you to our second option, which would be diversify into more conservative accounts. So typically on like a stash, there's a lot of aggressive accounts, but there are some conservatives, like the Conservative Mix, Park My Cash, Uncle Sam, and there's a few other ones that are pretty conservative. All That Glitters, I think, is still considered conservative investment as well. So I would start selling more of my ETFs that are aggressive and putting them into more conservative accounts. By the way, your account, in my opinion, your account should be around 25% invested into bonds, and then you can do like 75% into ETFs. That's my opinion. That's what in the readings and all that kind of stuff, that all the books that I've been reading, that's what I've seen is very good. But and you can turn that, never go below 25%, never go above 75% invested into bonds either or stocks, basically. Yeah, we're looking to picking up more bonds, precious metals, and REITs. So those are going to help hedge against a decrease in the market. Typically, U.S. Treasury bonds, when we have inflation, U.S. Treasury bonds go up in value. Real estate investment trusts do pretty well during a decrease in the market. Everything is going to kind of drop, but those will help still keep your account profitable, maybe. And then also gold, not specifically like precious metals in general, but I would say more specifically gold. It typically has a opposite relation with the market. So when the market starts dropping, gold starts rising. So those are the three investments I would start considering looking into those. And lastly, I would then continue to dollar cost average the ETFs that I'm already investing in. So if you use auto stash, that's great. I would just continue to invest into those. And that's going to help you get those stocks at a lower price, because you can buy more stock or buy more ETFs or percents of those ETFs at a lower price. And so that's when we have another bull run, you should see a higher return off those profits and that sort of thing. A little side note, I would consider holding some of your investment money out of the market, so out of those ETFs, and kind of a wait for a drop. So if you're doing like $100 a month into that account, maybe consider like doing like $10 that just sets in stash cash and leave it there, so that way you can have, if the market does crash, you'll have a little like nest egg that you can invest in the market during a crash or whatever it may be, or after a crash and we start seeing a bull run. So that would be my personal opinion on how I would manage my stash account in a crash. My principles are going to continue to change, but if you're looking to like change up during a crash or trying to like help hedge your account against a crash, that's what I would recommend, is getting into some REITs, bonds, and precious metals, trying to keep your cash as liquid as possible, and then also continue to dollar cost average and make those investments. So that wraps it up. Let's go ahead and dive into the question of the day, and that is, why is it so easy to hate life and not love life? I have no clue why that is, but definitely I think that humans in general tend to be more negative, and so we tend to focus on the negative when it comes to our life in general. And so definitely loving life could be a lot harder than hating it, because we can really be negative people. Anyways, if you guys have any questions regarding Stash, Acorns, or Robinhood, as well as general investing advice, business, Etsy, or coaching, post those questions down below, and I'll try to get them on the next episode. And until next time, don't forget to subscribe up here and check out, I am still giving away silver. And then check out this other video right here. And as always, thank you for watching. I really appreciate it.